Hello, I am John Najarian, and RebelCon 2022 is almost here. We do have a virtual pass. The virtual pass gives you full access to everything, all the streams, the live trading sessions, all of our fabulous keynote speakers. So to learn more about what's going on at RebelCon 2022, whether you're in person or virtual, check out marketrebellion.com/Dallas.
Good morning. I'm Pete Najarian. This is The Take on this Monday morning. Yes, my sound is a little bit better. My camera's a little bit better. I'm back in the saddle. And here we go. What wasn't looking too much better was all of last week. Let's be honest. When you look at it as not just a Friday trade, but let's go back to the entire week. For 1 week, we were only down 1,500 points on the Dow. That obviously wasn't so great. We were down about 700 points on the NASDAQ. That wasn't so great. We were definitely getting punished pretty hard. Big range for crude. It was 85 to 90. We finished the week at about 88.50. We were down 140, which wasn't as bad as most of the other days last week. In terms of the Dow, we were down about 105 for the NASDAQ, but for the week, it was really a punishing week. The VXN, the volatility index of the NASDAQ, that was around 3280. It crept up and got not only into that 30 range, but got all the way up near that 35 when you're looking at the full week, around 26 for the volatility index itself. But it really was the 2-year and the 10-year. This is something we talk about when we're on the Rebel's Edge, and John and I are hitting that macro minute. And each time that we did that in the last couple of weeks, I give them even a shorter little look at what's going on from a macro perspective, because that's all it's really worth. We take a quick look at that, and then you've got to react to it, right? And when you look at the macro minute, I said, keep an eye on the 10-year. I've been saying that now for about 6 months. The 10-year tells it all. When we got over 3, that was when a lot of that selling pressure really started to escalate. And obviously, as we pushed closer and closer to about a 3-4 last week, a lot of selling. And you look at last week, it was just amazing how much pressure was on the markets. We had retail sales, we had CPI, we had all these various numbers that really didn't help at all. And as a matter of fact, accelerated that move to the downside under some of that pressure that we had had. What really was getting hit the hardest on Friday and last week? Well, energy, industrials, down about 2% last week, on last Friday, actually. We had the materials down about 1.5%. We had financials down about 1%. We did get a little bit of a pickup late in the week on Friday. We got a little bit of a pickup from NVIDIA, from Texas Instrument, from Intel, Netflix, throwing a little Home Depot, maybe even a little bit on the healthcare side with Merck and Amgen, but FedEx was really, that was one of the names that absolutely dragged the markets down. That was down 21%. And then throw in the Adobe news last week of that huge acquisition they were going to be making, $20 billion. That was something that got hit pretty hard, pulling on the markets. International paper was down about 11%. DocuSign and Okta and CrowdStrike and Boeing and Chevron. You get the idea. It was some heavy selling, and it was selling just about everywhere. You take a look, tough to find much that was really in the green. We come into today, speaking about not being in the green, we come in today early, things looked okay. And then very rapidly, it looked like it was going to disintegrate. We started off the day in the pre-market down over 200 points on the Dow, down about 85 points on the NASDAQ. We have improved dramatically in this first hour. We stayed down. We were down 200, down to 150, down 100. Next thing you know, we actually got into positive territory for the Dow. Then we look over at the NASDAQ. It was down about 65 points. It hadn't gotten into positive territory. Last I looked, we were down about 25 points there. We had crude under heavy pressure early on. It was in the 82s. Now it's back up into the 84s. We had nat gas at around 750. That was down about 3%. Probably seeing some improvements there as well. Volatility was up towards 27, 28. Here we are back in the 26s, still relatively high, but in the 26s. We have the volatility index of the NASDAQ around that 34 range. And obviously, as time goes on, maybe that will come back just a little bit. What was really getting pressure early? How about Bitcoin with an 18 handle, 18,800? It was down about 6% early on. and then look over at the 2 and the 10-year. 2-year, 2.94. You look over at the 10-year, pushing right on that 3.5 level as well. So why a lot of that pressure early on? Well, you take a look over at that 10-year. It's going to tell it all almost each and every day. So big week this week. We got the Fed meeting. That is something we're all looking forward to. The movement we're seeing in the sectors themselves, I think, is something that is very, very interesting. And maybe it's even a little bit healthy, these turns. And it seems like there is some buying that comes in on some of these pushes to the downside with the right information. We'll see if that continues. Energy was down close to 2%, got all the way up to flat. We had healthcare down a little bit. It's still down, unfortunately, but technology down about 0.6%. That moved up towards flat, and a complete turnaround for financials. They were down about 0.5% early on. They were up positive, about 0.5% to the positive side. Early, every single sector was in the red. That is not the case any longer. AutoZone, pretty interesting. Same store sales numbers up about 6%. That was something over a year-to-date period. That was something that really was fighting against what was going on. But Adobe, we did have a downgrade there. We had Wells Fargo talking about that $20 billion acquisition and saying things are going to have to be perfect for this to work out. And that is not very often the case. Perfect is not something that happens in Wall Street all that frequently. 20 billion, we talked about it last week. We talked about the heft of that and how the interpretation is maybe a little bit of an overpayment there. You have Take-Two getting that hack. That was down about 6% early this morning. But not everything was down, even when the markets were down significantly. We had airlines, we had casinos, we had cruise ships all trading pretty nicely. Take a look at Royal Caribbean. You took a look at Caesars. Take a look at American Airlines, AAL. That's another one. How about the home builders as well in positive territory? Pulte Homes, one of those in the leadership role. We had Mosaic, which we've talked about. That's been either all in or all out kind of a trade there in terms of just getting hammered when it gets hit, and it's just flying when it's moving to the upside. Home Depot also in positive territory. But in healthcare, there was a lot of pressure, at least early on. Names like Moderna and Regeneron and Vertex and Lilly and J&J and throw in an Amgen, all under pressure. Chevron had a little bit of pressure early as well. Folks, I've got one unusual for you, and then we're going to be jumping over Rebel's Edge. That is at 1 p.m. Eastern, Monday, Tuesday, and Thursdays. And John and I look forward to that each and every week. We look forward to those Monday, Tuesday, Thursdays. It's a lot of fun. We're going to hit you on the macro minute. That will take less than a minute because that's all it deserves. Then we'll get into the 4 highlights of what we're seeing throughout the trading day. Then we're going to hit some unusual option activity. So a lot of people will say to me on Twitter and other spots, we miss you. You're not around. We don't see unusual. You get it here. You get it at the Rebel's Edge, and you get it at 3 and 3. 3 and 3 every day, 3 p.m. Eastern time. For me, this is obviously 10:30 Eastern time, but we've got that Rebel's Edge at 1 p.m. So look forward to seeing you then. And of course, a lot of sports. I was in Nebraska this weekend. It didn't go well for them, but great tradition, Nebraska, Oklahoma. It was a great sold-out crowd, again, like it always is in Lincoln. Got a lot to talk about in college and professional football. Who's real? Who's a poser? We got all kinds of things coming at you. Carvana is the option that we're talking about for unusual early on here, though. And Carvana trading around 33.50. They're buying 5,000 of the September 30th expiring. So you've got 2 weeks for these to work. And they're giving you a little bit of time, but they're also looking for a pretty substantial move. The 38 strike calls, again, stock trading 33.50. These are the 38 strike calls, $1.50 up to $1.70, 5,000 of those trading. Interesting because of a very nice hedge selling the 49 strike calls out in that same expiration cycle, getting about 30 cents for those options and selling many more. Something that not for everybody to do, but interesting to see that hedging going on, expecting it not to get up towards 49, but it's looking for a little bit of a run up through 38. And if that's the case, they've brought down the price by selling those upside calls. But if you don't understand it, you cannot do that. You just got to understand buying of calls. There is an expectation that these calls could come somewhere over the next 2 weeks and start really moving to the upside. We'll see if that happens. Folks, have a great day of trading. Look forward to seeing you on the Rebel's Edge, 1 p.m. Eastern, Monday, Tuesday, Thursday. See you then. Giddy up.